Hey everyone, before we move ahead, please click on the subscribe button to stay updated on our weekly business and finance related content, which is incredibly useful for business owners, CEOs, CFOs, entrepreneurs, and those who aspire to be one. Now let's get back to the video.
Hey everyone, we all know that 9% corporate tax regime has been implemented in the UAE. The FTA does recognize the importance of free zones in the UAE and therefore have given it certain benefits. If it meets 7 conditions, it would be allowed to get benefit of 0% corporate tax in the UAE. Such entities that meet all these conditions are called qualifying free zone persons. If any of these conditions are not met, it will no longer be a qualifying free zone person for that year and for the next 4 taxable years. So what are the conditions to be a qualifying free zone person? Firstly, which is a simple one, is that you must be licensed out of a free zone. It's also important to note that even if you have a branch in the free zone, or if you have a free zone company which is a branch outside the free zone, which could be in the mainland or even outside UAE, you could still avail for this benefit. This benefit will, however, be only applicable to the free zone section of the business, and therefore you would have to divide your business accordingly. The second condition is adequate substance in the free zone. For a qualifying free zone person, its core income generating activities must be conducted within the free zone. There must be adequate assets, employees, and expenditure to justify its activity in the free zone. We have already discussed core income generating activities with economic substance regulations earlier. To get a detailed understanding of core income generating activities with respect to corporate tax, we have done a separate video relating to this. The third condition is that the qualifying free zone person must earn qualifying income, and its non-qualifying income should not exceed the de minimis requirements. In simple terms, qualifying income includes the following: free zone to free zone business, which is transactions between free zone persons, as long as the free zone person that's receiving the service or goods must be the actual beneficial recipient of this transaction. The second one is qualifying activities. Income from qualifying activities with non-free zone persons that are not excluded activities are also allowed. Qualifying intellectual property. Income derived from ownership or exploitation of qualifying intellectual property. And finally, de minimis conditions. Any non-qualifying income will also be considered as qualifying income as long as it meets the de minimis requirements. The non-qualifying income must not exceed the lower of 5 million dirhams or 5% of total revenue. There is some source of revenue which may not be attributable to qualifying income. This has not been discussed here. We'll be discussing this and more detailed understanding of qualifying income in a separate video. The fourth condition is that the free zone person must not elect to be subject to tax. All free zone persons are allowed or given an option to be subject to tax at 9%. However, we must note that this is an irrevocable decision. So, if a free zone person decides to go for the 9% tax, they cannot move back to a 0% tax system. The fifth condition is that arm's length principles must be followed for transactions with related parties and with its own foreign and domestic permanent establishments. The profit must be recorded with internationally accepted profit attribution methods. In simple terms, the profit that's recorded in the qualified free zone person must be fair. This means that this profit that's earned should be the same as if it would have earned with an unrelated party. The sixth condition is that the qualified free zone person must maintain transfer pricing documentation. While arm's length principles are being followed, this is now demonstrated in the transfer pricing documentation. It must consider the functions performed, assets used, and risks assumed. At the time of tax return filing, a transfer pricing disclosure form must be submitted, and for such transactions, if the thresholds are met, a master file and a local file must also be maintained. We have discussed this in a more detailed video which will be linked in the description below. Finally, the seventh condition is that the qualifying free zone person must maintain audited financial statements. Audited financial statements are not a mandatory requirement for a normal taxable person unless the turnover of this taxable person is exceeding 50 million dirhams. However, in the case of a qualifying free zone person, irrespective of revenue, audited financial statements must be maintained. It's still unclear if this needs to be submitted in the tax return. If any of the conditions we've discussed so far have not been met, the free zone person will no longer become a qualifying free zone person for that year and for the subsequent 4 years, which means for a total of 5 years, this free zone person will not be allowed to become a qualifying free zone person. It's important to note, during this 5-year period, it's not a requirement to continue to meet the qualifying free zone person requirements. It's also important to note, for a qualifying free zone person, unlike other juridical persons in the UAE, there isn't a threshold of 375,000 of tax-free profit. The entire profit will be taxed if you are a qualifying free zone person. Hope this video gave you a better understanding of what are the major conditions for a free zone person to become a qualifying free zone person and avail for the 0% tax benefits.
Hey everyone, you've reached the end of this video. Thank you all for listening. If you like this content, please hit the like button and subscribe to our channel. If you'd like for us to talk about any specific topics, please do let us know in the comments below. Hope to see you in the next video.